Hey, it's Mark from Caliber. So I just wanted to go through what happened this past week with the markets and rates and some of the reports. So I'm sure that by now you've seen enough news come out about there's two job reports that came out this week. So remember, Tuesday was the 4th, so that the markets were closed. So nothing much happened that day. So the two big reports that came out were the ADP reports, which is a jobs report. That came out. So that number was expected to be about 225,000 new jobs. And there was actually a 497,000 increase in jobs. Big jump and way beyond expectations. And remember, I always say that it's always based on expectations. And good news on Main Street is bad news for buying. So this goes back to comparing it to February 3rd when the jobs report came out. The expectation was 885,000 and the actual number was 517,000. So again, another huge upside that was not expected. So this is what it looks like in over the time. So this, I'm going to just look at the last few days. So this is Friday. This is Thursday. This was actually the ADP numbers. And it's one of those things where you get this initial reaction. The investors have a knee-jerk reaction, and then they kind of digest the numbers over time. But you can see that going all the way back to the 29th of June, we are in pretty much a free fall. So remember that the bars represent bond prices, not rates. So the rate goes in the opposite direction as the price. So as prices go down, rates go up. So we are firmly entrenched in the 7% range, the low 7% range, depending on credit scores and programs and whatnot. But you're going to be hard-pressed to get anybody much less than 6 3/4 without paying a lot of points. So just keep that in mind. So when I talk about rates, everybody's kind of freaking out about rates being back in the 7s. For those buyers who qualify for MSHDA, the MSHDA no down payment assistance rate is at 6%. Now that's probably going to go up sometime in the next week. I would be surprised if it didn't. But they generally hike these rates 1/4 to 3/8 at a time. They don't go too crazy. So the down payment assistance version is 6.625, but the non-down payment assistance version is at 6%. And this really becomes important if somebody's buying a condominium that is not FHA or VA approved, because they got to go conventional, and conventional rates are higher on condos than they are in homes, everything else being equal. So the maximum purchase price allowed for MSHDA is $224,500. So if you have buyers who fall in that camp, looking in that price range, and their lender has not discussed MSHDA with them, I mean, they may not qualify, but if they at least haven't had that conversation, they should, because it's well worth it to go MSHDA and wait an extra 3 or 4 days for underwriting and get more than a 1% drop in the rate. That's fixed. I just had a client that closed last month. She put 40% down and used the MSHDA down payment assistance program because the rate was just so much lower. She bought a condo. I mean, it just made more sense to her to do that. So with MSHDA, with the down payment assistance, you don't have to put the minimum down. You can put 10% down, 20% down, 40% down. And if you do go conventional and you put less than 20% down, you get a discount on the mortgage insurance because you're using a bond program. So just keep that in mind. I'll keep you updated, as we go with rates. Don't freak out too much. The markets are cyclical. We think that at this point the Fed's pretty much entrenched. They're going to go ahead and raise rates 2 more times at 1/4 point a clip. So we'll see what happens with that. But as I said, we'll just look at different opportunities, different programs out there to keep people's rates down, and then we'll just go from there. Any questions about anything, about rates, programs, what we think is going to happen, give me a shout. Love to talk to you. Have a great day.